All right, a little bit of a bounce back today. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, inflation ahead. Futures are pointing to a partial recovery as investors brace for that CPI report due Wednesday.
Apple's most important event of the year kicks off at 1 p.m. Eastern today. We're live in Cupertino, Western, as the company unveils its new AI-enhanced iPhone 16 lineup.
And Big Lots files for bankruptcy after suffering from declining sales for years. Details ahead on that distressed retailer. All that and more. Let's take a look at where markets are trading about 30 minutes until the bells ring. Coming off of the worst week since March 2023 for the S&P 500. You can see, as Matt mentioned, a little bit of a bounce here. Of course, a rally building in the pre-market. The S&P 500 currently up about 0.7%. A slight lead for the NASDAQ 100, currently up about 0.8% on your big tech benchmark. Also having a wipeout last week. And then you take a look at the bond market. A little bit of a rise when it comes to the 10-year Treasury yield, currently up about 3 basis points, Matt.
So last week, we were watching for a disinversion of the yield curve. We actually saw it amidst the worst week for the S&P since 2023, the worst week for the NASDAQ 100 since 2022. That's because usually a disinversion of the yield curve means a recession. Take a look at these disinversions. The red shaded areas are recessions, the disinversions in blue. We had one last week. If we stick to that, does that mean this growth scare turns into a real problem for the economy?
We'll get back into the macro, but first, some pre-market movers. Palantir, Dell, both moving bigly. Following their addition to the S&P 500, they've replaced American Airlines and Etsy, and Palantir is up more than 8.7% pre-market, Dell up almost 5%, and Apple flat ahead of that event. Remember, that product launch is this afternoon. We'll talk more about it this hour, Matt.
All right, getting back to some extent to the macro, we did hear Fed Governor Waller talk about the possibility of front-loading at the end of last week, and really maybe the last Fed comments that we're going to hear until September 18th.
Yeah, we're officially in the blackout period. Let me read you this exact quote, guys. I think it was really interesting. Speaking after that jobs report on Friday, this is Fed Governor Chris Waller saying, quote, "I was a big advocate of front-loading rate hikes when inflation accelerated in 2022, and I will be an advocate of front-loading rate cuts if that is appropriate." This is a fun game, of course. We were having this debate in our morning meeting. What is the most important part of that sentence? Is it front-loading or is it if appropriate?
I actually think it's not that sentence at all. I think it's something he said outside of that sentence, which is that he doesn't believe the economy is in a recession or headed toward one. But he was really, to your point, what set off the bond market after that jobs report. It wasn't the jobs report itself.
I mean, why would he even say that if he doesn't believe the economy's in a recession or headed towards one? He doesn't think it's appropriate. So why would he bother to bring it up?
Also, if the Fed isn't going 50 in September or meeting after, why would he bring up the concept of front-loading? We should ask this question to our guests. Sitting to my left, I'm pleased to say, we have Liz McCormick. She is Bloomberg's chief correspondent for global macro markets. So, Liz, weigh in. What should we be focusing on when it comes to the speech? Is it the recession probabilities? Is it front-loading rate cuts? Or is it if appropriate?
Well, I love Matt, but I will say what Chairman Powell has said, even before Waller talked clear, is they're trying to avoid a recession, right? So I don't think Waller needed to say, oh, we're in recessionary conditions. They're trying to prevent that, right?
Well, he doesn't even think we're headed towards that.
Right. Well, okay, but they really want a soft landing, so you don't want to get too close, right? So I think, but I don't think he really set up a for sure 50 in September. If you read, like, you know, if appropriate, or will be, he gave himself enough hedges, but I think he's making clear, because they don't like to surprise the market, right? So right now the market's only priced at like 16% chance of a 50. So they're in the blackout. So if, say, CPI or things go that they feel like they need to go 50, I think you're going to see trickling into the press. You know, I won't say leaks, but, you know, their messaging. We saw that on the way up when we had a hot CPI and they were in a blackout.
And they leaked to the Wall Street Journal.
Yes, I wasn't going to say that, but they did leak to the press that it would be a big move, right? So I think right now, you know, I saw Krishna Guha had a great note at Evercore saying, you know, like it's kind of a cheap insurance to go 50, even though his forecast is they're going to go 25. So there's these comments out there of what I think they'll do and what I wish they would do.
Well, let's talk about positioning, because if you look at how far the 2-year moved on Friday, on the heels of those comments, they moved more than 9 basis points, almost 12 basis points actually now, has corrected a little bit. But to the point that you guys have been making also, only a 16% chance of that 50% rate cut in the September meeting, right? Where are we now?
Yeah, September 18th.
Right, September 18th. And through the end of the year, there's still well over 100 basis points. At one point, there were almost 120 basis points of cuts cut in. Have people overcorrected?
Well, there's people saying they are. Like, we have a story out that just has many investors saying the market's gone too far. But the thing is, and Waller kind of left that door open, is say, like you said, Sonali, the market's pricing over 100 basis points for the rest of the year. So we have 3 meetings, right? So if they go 25, that means they could do the other 250, right? And we have over 200 priced over the next whole year. So that's a lot. So I think that we do, to be nicer to Matt, we do have to see the economy weaken a little bit more and show signs of, the labor market cracking more for them to speed it up. So
heading towards a recession?
Maybe heading towards a recession.
That's not what Waller sees right now.
Although my son tells me I've been calling for a recession forever, Mom, and it hasn't happened, so.
Well, before we let you go, I do want to ask, when you're talking to bond investors, you're talking to your sources, what is the dividing line between, what the Fed should do and what they think they actually will do? How important is that distinction right now?
Well, I think right now very important, because there are many saying, I think they should do 50. They should have done 50 a few meetings ago, right? But they don't seem to want to do it. They want to start gradual, and they're going to go 25, even though I don't like it. I think the key is there's some investors seeing the soft landing and saying, hey, like JP Morgan Asset Management is saying maybe 75, 125 only in the whole cycle. So I think it depends on your view on the economy, but I do think there's a big camp saying, this is what I think the Fed should do, even though I think they're going to do this, right? For whatever that's worth, right?
All right, Liz, thanks so much for joining us. Bloomberg's Liz McCormick there talking to us about 50 or 25. Let's get to Jack Janasowicz about this portfolio manager, lead portfolio strategist, and Natixis Investment Manager Solutions, because, Jack, it matters, right? How quickly and how deeply the Fed cuts. What are your expectations?
Well, thanks for having me back, Matt. And I know you guys had given, I think, 3 choices there. Maybe I'll throw the 4th choice in. The fact that the Fed is finally cutting, I think, is probably the thing that matters even most to us here. And if you get a consecutive series of 25 basis point cuts over the next 2 quarters, I think that's just as fine right now. There's plenty of cover for the Fed to go 50. But even if they don't, the idea that they're finally cutting, I think, is the bigger takeaway that we have.
At the end of the day, does that reflect an optimistic view here, that perhaps that the Fed does not need to cut 50 basis points multiple times through the end of the year? The economy is doing just fine.
Yeah, we tend to fall into that camp where I think the economy is doing just fine. And I think this is somewhat of a growth scare, right? I think the market's over extrapolating some of the more recent weaknesses. But the thing that we fall back on is that household paycheck proxy, right? Simply multiply how much are we making each hour, how many hours are we making each week, and how many people are employed. That's growing at close to 5% on an annualized basis. If we look at the period before COVID, so 2010 to 2020, that was growing around 4.5%. So we are growing well above the pre-pandemic level. And to us, that's basically consumer buying power that's still resilient.
And so, Jack, you wrap that into what we're seeing in the markets right now. The S&P 500 down more than 4% last week. The NASDAQ 100, big tech, down by almost 6%. What you're saying is pretty reassuring that if you take a look at the fundamentals of the economy of some of these companies, things aren't so bad. And yet you take a look at the major benchmarks, not necessarily seeing that same calm.
Yeah, and I think, listen, if you take a step back and some of the things that we focus on, let's pull out the Beige Book, for example. You had wordsmithing there, the comments related to the word soft, softness, softer, softening. You had 55 word counts in there. Recession came up 0 times. FactSet did something that was pretty interesting where they're doing the wordsmithing as well. How many times did you hear the word recession in earnings calls? It's at the lowest level that we've seen in quite some time. So, these companies are on the front line of the economy and they're not mentioning recession. So from that perspective, a little bit of profit taking, not surprising. We all know the September seasonals. We're looking at buying on weakness in here into the end of the year.
So you want to buy on? I mean, I noticed that we do a survey of Wall Street strategists. We had 20 participating in our most recent survey, and the average year-end call is 54.69. So we're pretty much there right now on the S&P, right? All we have to do is gain I think, less than 1% in today's session, and futures indicate that we are headed that direction. You think we can gain much more than that?
Sure. I don't see why we can't simply head to new highs before the end of the year. And again, take a step back. You're basically getting into an easing cycle. The people that are providing liquidity are telling you we're going to be providing liquidity. And I think that's a pretty big catalyst as we head into the end of the year.
I want to take the flip side of the argument here, Jack, because even though you're quite sanguine about the direction of things, what would cause you at this juncture to change your mind, knowing that we are seeing strains in the consumer and knowing that there are plenty of concerns out there on how fast this labor market turns?
And I think that's the key, right? Just paying attention to what we're seeing in the jobs market. I know we're seeing cracks in the lower end of the consumer basket. It's really a bifurcated consumer, if you will. But again, keep in mind that lower spectrum, that lower quintile income bucket, they account for less than 10% of total aggregate consumption here. So the part of the economy that's being driven is really the upper echelons of that income basket. Household net wealth at all-time highs. Corporate balance sheets are at very strong. I just think it's very tough to make a discernible bearish case in here until you see that labor market really rolling over. And right now, we're just not seeing signs of that.
So with that nuance when it comes to the consumer and with the resilience of the overall labor market, how do you position a portfolio around those views? Where are you finding the opportunities when it comes to sectors, when it comes to specific industries, Jack?
Yeah, I think the big one here is simply that you're going to see that rotation, the market breadth story starting to expand. And we've already started to see that happen over the last couple of weeks, right? You're seeing growth slowly taking a back seat. We're seeing a little bit more coming from the cyclical side of the equation. And again, I wouldn't be shocked if we continue to see those parts of the economy working. That means something like industrials, financials. Wouldn't be shocked if those continue to move in here. And maybe you get even a little bit of a bounce off of the discretionary side simply because maybe the market's a little bit overshooting to the bearish side on the consumer. And it ends up being maybe a little better than expected. And you get a rebound, especially in housing, as rates start to move lower.
We had a guest last week, Greg Bottle from BNP, saying that rather than buy the dips now, Jack, he wants to buy volatility when you see that drop off. What do you think about using options here? Does it make sense to you?
Yeah, I think there's a little bit of a case to be made for volatility. Obviously, if you look at the seasonal patterns for the VIX, as we head into the election year, vol tends to be elevated September into October. So maybe it makes some sense in here to be buying volatility. But I think once we get into that sort of beginning of October, I wouldn't be shocked if sell vol comes back into play, and that's what you want to do as you head into the end of the year. And vol basically gets back to more normal levels with a sub 20 handle.
Jack, I get the rationale to dip into some of these underloved sectors so far. Maybe positioning was too bearish one way or the other. But what about too bullish on the other side? You look at the pain that the Philadelphia Semiconductor Index felt last week. Do you think it's justified, and do you buy that dip?
We still think tech works in here, but I think you're going to have that leadership baton being passed off to other sectors of the marketplace. So sure, tech's taking a breather. Semis have been on a massive run. NVIDIA up almost 170, 180% for the year. Now we've corrected back, so it's only up 100%. It makes some sense to take some chips off the table as you start to hit this volatility spike into the election backdrop. But I don't think you can really dismiss tech in here. So tech maybe is a market performer, and you might start to see outperformance really spreading out as the breadth starts to widen out. So again, I wouldn't be giving up on tech in here, but certainly that leadership is going to shift hands, we think.
All right, Jack, really great to speak with you. Joining us from Natistic Investment Manager Solution. Appreciate your time. And let's take a look under these markets right now and take a look at what's moving ahead of the opening bell. You can see the S&P 500 currently up about 0.7% pre-market. The NASDAQ 100 up 0.8%. Small caps not exactly joining in on that rebound. You can see the Russell 2000 currently up about 0.1%. There's a lot of movement under the surface. Let's get to Emily Grafeo right now because the S&P, of course, announced which names are in and out at their upcoming rebalance. Who are we keeping an eye on?
So we're watching Palantir and Dell. Those were kind of the two largest and most significant names that were added into the S&P 500. Those changes will go into effect Monday, September 23rd. It's no surprise that we see kind of two companies that are capturing that investor appetite for AI being added to the index. On Dell, that's the hardware side. Obviously, they supply servers that will power artificial intelligence. And then Palantir, known as a surveillance software company and also a play on AI. American Airlines was removed. I guess that's underscoring kind of the industry woes that are plaguing the airline.
It's a polite way to put it. I appreciate that.
We've noticed. I'm looking at the biotechs here. We've talked so much about Keytruda from Merck, but apparently Summit Therapeutics has a better drug to beat cancer, and that's obviously made the market happy.
Yeah, that's at least according to analysts on the street and investors this morning. We're seeing that stock up about 38% in pre-market trading, and they showed over the weekend at a presentation that there's statistically significant improvement in progression-free survival compared to Merck's lung cancer drug. You look at what H.C. Wainwright had to say, analyst Mitchell Kapoor, he said the Summit drug is clearly better than Merck's in non-small cell lung cancer.
That's good news.
It sure is, and you see it in the stock as well. There's another thing that's moving this morning. I wanted to talk about Squarespace and Permira amending their deal agreement here.
Yeah, they boosted their buyout bid for the company. The two companies said in a press release that they signed an amended merger agreement. Squarespace shareholders will get $46.50 per share in cash. That's about $2.50 higher than the previous offer price, and brings the transaction to a total of $7.2 billion. And of course, we're talking about the website publishing company Squarespace and Permira, the private equity firm looking to buy them.
All right, Emily Griffeo, really appreciate that roundup. Now, coming up, we'll get more analysis next on Boeing after the company seemed to score a couple of wins in Seattle and in space. This is Bloomberg.
Let's get now to high interest to look at what's making headlines around the world. Couche-Tard told 7 & I that it wants to work together to agree on a friendly takeover of the Japanese convenience store operator. The move comes after 7 & I, which is open to a sale, pushed back on the Canadian company's initial proposal for being too low. Talks are set to intensify over what would be the biggest foreign takeover of a Japanese company ever. Meanwhile, B. Riley is negotiating the sale of a majority stake in its Great American Group and the financing of Brand's portfolio, with the company expecting to raise around $400 million. The company intends to use the majority of those proceeds to accelerate debt repayment. Bloomberg reported last month that Oaktree Capital was in exclusive talks to acquire majority stakes in both entities. Both transactions are subject to the completion of due diligence. And Boeing shares are actually up in the pre-market, trading on rare optimism that a labor deal with its largest union will help avoid a potentially crippling strike, at its Seattle area factories. The troubled plane maker hammered out a landmark deal over the weekend, which includes a 25% pay hike over 4 years and a commitment to build the company's next plane in Seattle, according to statements from both sides. Sonali?
Matt, we're going to stay on the Boeing story. Joining us for more is Bloomberg Deputy Editor for Global Aviation, Sid Phillip. He is in Washington today. And you think about this deal alone, it includes a wage increase over 4 years, plus an immediate benefit here to the laborers. How much of this is a win for Boeing's CEO, Kelly Ortberg, who has really just started to take the helm here and try to turn things around for the plane maker?
Morning. Yeah, for Boeing, this is a massive deal because essentially it could potentially avoid a crippling strike that could sort of decimate production, and then that would sort of lock up free cash flow. So for Boeing to get cash rolling again, a deal is crucial. It's still early days. We still need to see what the workers decide to do. I mean, there's 33,000 workers, and they will vote on the deal on September 12th. So it's still early days. There has been discontent from the workers, and they have been sort of very anti-management in the past. So it will be important to see how it goes from here. But for Boeing, potentially, if they can get a deal through, it will be a huge win because they can sort of keep production going and actually get jet delivered and basically unlock cash for themselves.
So a win for Boeing, an early win for the new CEO, Kelly Ortberg. I have kind of a curveball. I want to talk about the space program, of course. That's really been taking a lot of the attention over the past few weeks, what's going on with the astronauts stranded in space. Is Kelly Ortberg going to kill the space program? I mean, it seems like he sort of has a free pass from Wall Street to kind of take a knife to a lot of these things.
Yes, so for Boeing CEO, I mean, there's a lot of issues that he needs to resolve and get his feet on the table and make sure that they can sort of come out of all their various crises. And so it's still early days. We still don't know what his priorities are on space, but given the fact that the commercial aviation business is in such big turmoil at the moment, and they have other issues across the board, it will be interesting to see what sort of position he takes on the space business. That was also a sort of rare good news moment for Boeing because they managed to get the Starliner back to Earth, and we will still have to see what the details are and what they sort of what they learned from the landing, but it did make it back successfully.
Right, empty, of course. We're showing video there of people coming into the ISS, and that is not from the Starliner return because it was completely unmanned. They were afraid it might kill all the people aboard because of helium leaks they've been experiencing. I mean, Boeing has just been losing. We're talking about, a rare bout of optimism on Wall Street today, Sid, but they're off, I think, 40% year to date, and they are down from $250 billion market cap to less than $100 billion now. Is this company, though, too big to fail? I mean, are they so important to the national security of the United States of America that they could pretty much, shoot somebody on Fifth Avenue and still get elected?
Oh my God.
It is very important. I mean, given the fact that there are only two plane makers in the world at the moment, there's Airbus and there's Boeing, and Airbus can't really take on the work that Boeing can't make. So essentially, it is vital that Boeing gets its act together, and it is too big to fail.
All right, Boeing shares down about 40% through Friday's close. Sid, really appreciate you playing along. That is Bloomberg's Sid Phillip, and this is Bloomberg. All right, let's get a check on futures with about 4 minutes to go until those bells ring. You can see we have a little bit of a rebound rally on our hand. The S&P 500 up about 0.7% pre-market. Big tech up 0.8%. Even the Russell 2000 now getting in on some of the action. Of course, we're coming off the worst week since March 2023 for the S&P 500. But guys, 150 basis point cut from the Fed, and that's in the rearview mirror.
Fascinating. You actually have two-year yields on the rise today. So let's see if these expectations recalibrate, especially going into the big day.
Yeah, the first day of yields rising in 5 sessions. I just note that a lot of people were buying this rally on the way up recently at high valuations. So if we continue to fall, if we get another week like last week, they're going to have to sell.
Going to turn into, I don't know, we'll see.
A meltdown.
A meltdown. This is Bloomberg.
It's a new week. It's a new session, moments away from the start of the cash trade. This is Bloomberg Open Interest. I'm Matt Miller. After the worst week for the NASDAQ 100 since 2022, we're looking at gains on those futures, 0.9%. Here you can see S&P futures up about 0.8%. A little bit of optimism that we're going to finally get a Fed cut, although we still have a CPI read in the way before that. Hear the opening bell down on the New York Stock Exchange as well as the NASDAQ market site on Times Square. We have a lot of superlatives in terms of the horrible week that was, Katie, but it looks like we're going to see a little bit of a revival in risk assets today. What are you seeing in the first moments of trading?
A relief rally, if you will, because you take a look at these markets, of course, as the bells ring, we are 25 seconds into trading, and there's a rally to talk about. You can see the S&P 500 currently up about 0.7%. The NASDAQ 100 up 0.9%, leading here. Of course, as you said, it was a very, very bad week last week, so still quite a hole to climb out of there. And then you can see the small cap index also seeing a little bit of green today. The Russell 2000 up about 0.2%. Meanwhile, let's take a look at some of the single names here because we have to talk about Palantir and we have to talk about Dell. The announcement coming out on Friday that they're joining the S&P 500 later this month as part of its latest quarterly rebalancing. You can see shares right now rising in anticipation. Sonali.
I'm also watching shares of Summit Therapeutics just soaring more than 32% at the open here after the biopharmaceutical company presented the latest data of its lung cancer drug, which is a direct competitor to Merck's Keytruda. You have Merck down now about 4% at the market open, Matt.
As long as one of them works, we'll be happy. Apple holding its annual product launch today with a focus on the next generation generation iPhone and refreshed wearables, but also a lens into, at least we hope to get a lens into, they're going to spin it into a lens into Apple's AI future. You can see that investors don't look terribly optimistic. Just minutes into the start of trading, the shares are down 0.3%.
Also, lack of optimism in Big Lots. It has filed for bankruptcy, and the shares are tanking after years of declining sales and closing locations. The discount retailer agreed to sell its business to private equity investor Nexus Capital. We have Bloomberg's distressed debt senior reporter Eliza Ronalds-Hannon joining us now, who was reporting on this for a while. And how does the Big Lots story compare to what else you're seeing in the world of retail at a time where people are really worried about the consumer?
Well, it's a bit of an optimistic story, believe it or not, just because you've seen so many retailers who file for bankruptcy these days going in with the knowledge that they will liquidate. So simply using Chapter 11 to apportion their assets and repay creditors. But against all odds, sort of, Big Lots has a buyer, will continue to operate and exist if all goes well, and is planning to shut, not many more of its stores and really continue to operate as a big chain retailer. And that's despite the fact that it has reported losses for almost every quarter for several years now.
Growing up in the great state of Ohio, I'm very familiar with the chain. And it was bustling back when I was a kid in Newark, Ohio in the 1990s. But what's the store like now? What do they need to change? What do they need to turn around, Eliza, in order to get back on their feet?
Well, I think they need a macro turnaround a little bit because it has really suffered from consumer trends. So even though you would think that consumers trade down to discount stores like Big Lots in a crunch or amid of inflation, it's been more of this time around at least, this round of inflation, this crunch has affected lower middle class Americans so much, and they are the ones who are the target shopper for a place like Big Lots, and they are simply spending no discretionary income on home goods whatsoever. They're just trying to buy food and gas. So if that loosens up, that'll do the trick potentially for Big Lots, but I think they also really need to focus on basics. They had for a long time shifted their focus to furniture a little bit, and that was not the best move for them, especially once housing slowed down and there wasn't as much appetite there.
And it's important to point out, of course, that shares of Big Lots still halted after an absolute wipeout. Great reporting. Really appreciate your time on this Monday morning. Our thanks to Bloomberg's Eliza Ronalds-Hannon. And for more on these broader markets, let's turn the conversation over to Marianne Bartels. She is Chief Investment Strategist over at Sanctuary Wealth. And Marianne, just one more time, let's run through just how bad last week was. The NASDAQ 100 down nearly 6%, worst week since November 2022. The S&P 500 down more than 4%, worst week since SVB collapsed. Are things really that bad?
No. So the way I'm looking at it is that this is a test of the August lows. And we're starting to get some fear and panic in the market. So how do we measure that? We look at the VIX index, which measures volatility. That's above 20. And historically, when you're above 20, it's been a very good time to actually buy equities. If you look at the put to call ratio for equities, we're starting to see some panic in there. And some of my breadth measures are getting close to buy signals. So we may have a little bit more volatility, a little bit more chop. But I think what the surprise might be is September's not going to be as bad as some people are anticipating.
At the end of the day, what does this mean for how much drawdown you might see, Marianne? Because if you think that things are not so bad out there, yet there's this much choppiness, it really raises the question, what's the floor?
Well, the floor is around 5,200 on the S&P, and that's really it. That's not what I'm really focused on. You may get there, you may not get there on a test. The indicators suggest that if we have 1 or 2 days of really big chop, we're going to really start getting some great buy signals. So I think we're pretty close, which means none of us can really time the markets exactly when they bottom. But now would be, if you were looking to buy the markets, we think this is a good time to actually be nibbling in the markets because we do believe we're going to continue to get a year-end rally.
What about the concern, our Bloomberg stock story pointed out that a lot of investors have been playing catch up in this rally, right? And you can see that with strategist targets. They keep having to raise targets as the index climbs higher. If they're buying at, already kind of heady valuations, and we see a correction like the one we saw in August, or a week like we saw last week, don't they have to sell earlier? Doesn't that kind of take, the conviction hodlers out of the equity market?
Not if we get a year-end rally, it doesn't. And let's, we've all been talking about the amount of cash that's on the sidelines that's not participating. And, we are expecting the Fed to cut rates on the 18th of this month. If rates really continue to come down, as that cash matures, it's going to be looking for a new home. So I think that's another potential driver. And another driver is the employee tax credit from COVID. The IRS is starting to actually open that back up again. So I think you're starting to see some more liquidity actually come into the markets. And I think part of the concern also is we're in a presidential election, the uncertainty of who is going to be the winner. And I think once we get past that, the markets will really find their footing and have a really nice rally. And remember, November tends to be a great month. October, we create important bottoms, but we actually might make an important bottom here in September instead, because too many people have been focused on how weak September is.
And I appreciate you outlining, of course, the sources of fuel of that potential year-end rally. And I want to talk about the composition of what that could look like. If you think about who is actually going to lead that, does leadership look like the big tech names, of course, some of the most beaten down stocks right now? Or do we maybe see that broadening out that we had been talking about so much maybe a month and a half ago?
We've definitely have seen a broadening out. We've seen interest rate sensitive sectors like REITs, utilities, even some consumer staples, and you even have healthcare in there, start anticipating a rate cut. That's allowed the breadth of the market to reach a record all-time high. That's where I get some of my conviction that this rally is not over. And we've had confirmation from volume. So those two have been very important indicators. Tech has not come back the way you would think tech would come back, or tech related. I'm watching that very, very closely. I don't think they're out, but I think it's going to be very important to watch how tech performs as we go into the end of the year to see how they're actually going to perform for next year.
How do you define tech? Because you think about the weakness you've seen in the Philadelphia Semiconductor Index. I'm pretty obsessed with kind of just how much you saw a sour tone to start the month.
She's not lying.
I've been talking about it a lot. Well, every single stock in that index through the end of last week was down. You are seeing a boost in the index to the tune of 1.8% now. What is with the attitude? Do you think that this kind of undertone of sourness sticks around?
So you bring up a really good point. Semiconductors have been the leader of this tape, and they're very, very important to watch. They have been weak, but I haven't seen anything significant in terms of the leadership signal that they're ready for a breakdown. So I do think they can rally into the end of the year. I'm more concerned about 2025 than I am this year. So I'll watch this rally that we get in technology as an indicator on how markets might be behaving, because leadership really drives the direction of markets over time.
All right, we're going to check back in with you soon, Marianne. Great to get your take. Really appreciate it. Marianne Bartels there of Sanctuary Wealth talking to us about what she sees happening in equity markets, and then more specifically what she's watching for example, in tech. I know you're watching it very closely. I think it's fascinating that you had all members falling for so many days, trading days in a row.
I think it's fascinating that you have this divergence. You have some places like Citi making Apple their top AI play over NVIDIA, but others still holding on to NVIDIA as the story for AI. We'll see.
Speaking of Apple, we are live next from Apple Park. Is it really called that? Apple Park in Cupertino, California, ahead of the latest product launches. They're going to want you to think that AI is involved in everything they make from this point forward. Do you buy it, is the question we pose. This is Bloomberg.
All right, this is Bloomberg Open Interest. You're taking a look at stocks 15 minutes into trading. You can see a big, beautiful rally on our hands. The S&P 500 up 0.9%. The NASDAQ 100 up by more than 1%, of course, just covering the scars of last week, but still a rally nonetheless, extending to the Russell 2000 up about 0.4%. Meanwhile, it's time for our top calls. Some of the analyst action in focus this morning. And first up, JP Morgan says U.S. Steel is a buy. The firm is upgrading the company to overweight as it sees a more favorable risk reward for steel stocks. JP Morgan also raising Nucor and Steel Dynamics. Next up, Deutsche Bank says Colgate-Palmolive is no longer a buy, downgrading the consumer products company to a hold. The firm says it's approaching the final months of this year, quote, with a degree of caution as companies contend with slower sales growth. And finally, Citi says that it's time to buy MarineMax. It upgraded the boat retailer and raised its price target, calling the stock a strong play on anticipated Fed rate cuts. Citi says that boat affordability has been hit hard by the high rate environment, Matt.
Yeah, tough to get a boat these days at a low rate. I know that. Today, Apple will unveil its latest lineup of products. Bloomberg Technology's Ed Ludlow is in what is apparently called Apple Park in Cupertino, California for the event. Ed, I'm sure that they want us to think they have installed a massive amount of artificial intelligence into all of these products. Is that the case?
I mean, that's the simple question, how much of it's accessible straight away, but also just the simple story. If you're a consumer with a prior generation iPhone, what is it that prompts you to upgrade? You know, the expectation is you get 4 variants of a new iPhone 16 generation with sort of modest hardware upgrades. And if I think back to WWDC earlier in the summer, the story was very much that, look, it's the kind of hardware optimization that's going to make AI on my smartphone something I'm interested in. But as Bloomberg's Mark Gurman's reported, you know, the new iPhones will ship later this month, but Apple Intelligence, its artificial intelligence platform, will come in iOS 18.1 next month. And there's kind of this staggered rollout. Although I would say the street seems pretty bullish about the idea of a super cycle with consumers around the world just really ready, Matt. They're so ready to use AI on their phones.
Ed, are they ready? Because the other thing Gurman points out, I love how he phrased this, is allow me to provide a dose of reality. That's everything from weaknesses in China to consumers around the world holding on to their money, and everything down to the technology itself, that it can't deliver in that near-term horizon that those bulls want. Is he right?
Yeah, there's a lot of skepticism about sort of what's actually useful. If you look at the beta version of iOS 18.1, you know, in the age of generative AI, it's quite basic stuff, right? Text summarization is an example. Some of what will come in later releases of iOS, you know, is somewhat delayed, according to Bloomberg's reporting, is the image generation tools. And as far as I can tell, like, using a generative AI text-to-image tool is largely used for meme creation based on social media. I don't sort of see that much beyond the creative arts happening. So that's kind of an interesting standpoint.
Election interference.
It really is the question of timing, right?
I mean, Ed, are you suggesting that meme creation isn't a worthy goal here for AI? The hopes and dreams?
Katie Greifeld, for you, meme generation is your raison d'etre. I get that. But you have to think about the smartphone market in aggregate, right? I think the forecast is that actually we'll have a good year in full year 24 if you go on IDC data or whatever. But that's largely driven by Android. Next year, the delay, but there will be a comeback for iOS and the iPhone, driven by some of this sort of staggered release of AI tools.
I was half joking, but I really do appreciate you taking that seriously. It's very Ed Ludlow of you. Let's talk about some of the other products that we're going to learn about today. Of course, watches, AirPods. What else should we be keeping an eye out for?
Yeah, so 4 variants of iPhone 16 generation. But if you think about it like this, wearables and iPhone in aggregate is 60% of revenue. And while you have this annual cadence of smartphone handset refresh, it's been a couple of years since on the wearables side, there has been a rethink and variety of new products. And there's a lot of excitement around that, particularly at the low end when it comes to AirPods, because that might bring in new buyers that are yet to be a part of that ecosystem. And of course, as we always talk about on Bloomberg, right, the services story depends on the installed base. How many of the devices are you using and how much of that prompts you to part with your cash on a monthly basis, subscription basis for other software tools. So that will be a big part of it as well.
Ed, we thank you so much for your time. Looking forward to your reporting throughout the day and maybe even some scoopage. We'll see. That's Ed Ludlow in Cupertino. Now, coming up, we're going to break down Murdoch's grip on News Corp with a Starboard filing a proposal to do away with that dual-class share structure. That's next in our Wall Street Beat. This is Bloomberg.
This is Bloomberg Open Interest. Let's take a look at the stock market as investors pile in to buy that dip. The S&P 500 up about 0.9%, a strong start to the trading week. The Nasdaq 100 even more so. Big tech up 1.2% after that beating that index took last week. And the small caps, of course, getting in on the action to a lesser degree. The Russell 2000 currently up about 0.3%, Sonali.
And it's time now for the Wall Street Beat. Today, we're focusing on a new call by Starboard Value to end News Corp's dual-class share structure. We're going to get more details now from Bloomberg's Crystal C. I want to read some of this letter. It is punchy. It says that the 4 Murdoch siblings with voting rights within the trust are reported to have widely differing worldviews, which collectively could be paralyzing to the strategic direction of the company. This is according to Starboard. We are not sure why their perspective should carry greater weight than the views of other shareholders. Now, Starboard is a shareholder. I love it. I love a good drama on a Monday morning. Crystal, how much clout does Starboard have in this fight?
So Starboard has been very effective in asking for changes in the boardroom, and like you said here exactly, it's very dramatic. It's almost like a succession in real life, where you have Stewie, which in this case is Jeff Smith, playing the role of trying to change up the boardroom dynamic. But right now, what he's filing is a non-binding proposal with the AGM. It doesn't mean that it's going to automatically show up in the ballot. So shareholders are not immediately voting for the abandonment of the dual-class share just yet. But he's making the point that because there are so many children of the Murdoch family, they may not come to the same conclusion, and you no longer have the argument of keeping that visionary leader who is Rupert Murdoch, because he left the company last year in the chairman role.
Stewie, I cannot get that image out of my mind now.
Stewie. I actually didn't watch the show.
Succession?
It's a good time to now.
It seemed like a little bit depressing. I started it, and they were had servants trying to play softball for $1 million.
The dialogue is top-notch.
In any case, how realistic is this? I mean, can they really get across what they want with such a small stake?
So right now they are filing for a small stake, and they have both Class A and Class B shares. Just taking the stake aside, the amount of the stake aside, the dual-class structure has been increasingly unpopular in the market anyway. So if you go to a proxy advisor, someone like an ISS and Glass Lewis, they haven't been the biggest fan of this structure. And even the exchanges have had rules where if a new company were to have that structure, they need to have a sunset clause to it. So I think this may resonate with a lot of passive shareholders as well as the proxy solicitor, corporate finance community here. So in a corporate governance sense, this argument makes sense. But whether the Murdoch family can keep News Corp within its family trust, that is something that they would definitely fight very hard for.
We have about a minute left here. It's really interesting to see this particular industry go through this type of transformation at this point in time. Does that have anything to do with it, the landscape itself?
So there's a lot going on in media. You know, we've seen a lot going on in the activism world. Disney had a couple of very big activist investors. I think media as a whole, with streaming coming to people trying to monetize streaming, it is really in a moment where it has to come to some sort of either consolidation or some sort of reckoning. So that would really present a lot of opportunity for activist investors. So we may see more of that coming up, and this is really playing out in real time now.
Yeah, I think that's the most interesting sort of 35,000-foot point, right? Mm-hmm. Everything is in a bit of chaos right now, and it needs to be put back together.
And the vultures are circling.
Exactly. All right, Crystal, thank you so much for joining us. Crystal C, they are talking to us about this activist campaign and media. Let's get to the trading diary. This is what you need to be watching this week. Today at 1 p.m. Eastern, Apple holds a product launch, so if you're shopping for something, I guess this is what you can look to for any progress. Kamala Harris and Donald Trump have their first television debate in Philadelphia on Tuesday. That's kind of the big deal until the inflation number comes out on Wednesday, CPI before the Fed's next meeting. And Friday, we get the latest University of Michigan consumer sentiment survey. This is Bloomberg. All right, we made it through the first 30 minutes of trading this week. Is it 6 hours to go until the closing bell? Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, Apple's most important event of the year kicks off at 1 p.m. Eastern. We're going to be live in Cupertino as the company unveils its new AI-enhanced iPhone 16 lineup.
Treasury Secretary Janet Yellen attempts to calm recession fears, telling Bloomberg's David Gura she sees no red lights flashing for the U.S. economy.
And Donald Trump adds a new pillar to his tariff platform ahead of his high-stakes debate with Kamala Harris tomorrow. All that and more coming up. But let's take a check on these markets. Like Matt said, we survived the first 30 minutes of the trading week. Not exactly an accomplishment, but you can see we have a huge rally on our hands. The S&P 500 up 0.9%, nearly 1%. The Nasdaq 100, your big tech names, really leading the charge higher here, up about 1.2%. Of course, they were the biggest losers last week. So there you have it. Then you take a look at the bond market. Yields doing something they haven't done in what feels like a while, rising a little bit right now. The 10-year Treasury yield up about 1 to 2 basis points. Let's broaden out this conversation now because we're joined by Stephanie Guild. She is Robinhood's Financials Head of Investment Strategy, joining us at the desk. Stephanie, great to see you again.
You too, likewise.
So we have a buy the dip moment going on in markets right now. When you take a look at your platform, at Robinhood users, are they part of that?
Yes, I was looking last week. So our Robinhood Investor Index shows us consistently over time that our customers buy the dip and trim winners equally. I would say they've been doing a little more selectively. That being said, when I looked over more recent data, there's also been some just adding broadly to index ETFs. So they pretty much consistently do it, and this is no different.
We're so close to the average. Lou Wang on the BN side puts together strategist forecast for the year end. Out of 20, the average is 54.69. So we're just 10 points away from that. And I feel like strategists have to keep playing catch up as this market climbs over the last couple of years, right?
Yeah.
Even with last week's drop, do we have a lot more room to run?
I think towards the end of the year, yes. So I have a call of around 5,800, and I actually still think we can get there. But I also thought that we would have a pullback sometime in the August-September period. Consistently, I think about the last 2 decades I've been in the market, and the week after Labor Day is always weak. And so it's not surprising to me to have this. And then you have an environment where valuations are elevated. So I just think we're going to be in this kind of recycling, anxiety-driven market because we're also heading into an election cycle. And there's just, there's a lot of things to be nervous about, but I think we'll still get there.
A lot of that anxiety is predicated on the labor market. And you had Andrew Hollenhorst over at Citigroup speaking to Tom Keene this morning for Bloomberg Radio Surveillance that the unemployment rate can kind of quickly barrel towards 5%. You can easily see a path there. What would it take for you to get more nervous about this market, given where we stand in the labor market? You could see it 2 ways, can't you? There are plenty of people out there that say this is a healthy participation, but do you see a further weakening that would change your view?
Yeah, I have kind of for the last few months have said if we get to a 4.5% unemployment rate, I'm going to start getting a little bit more nervous and cautious. We're not quite there, and we just saw it dip back down to 4.2 from 4.3. So I do think it's because of increased participation, and you're also just seeing, I think, a normalizing of the labor markets. I just don't think it's something to be nervous about yet. It's just not as hot as it was, and we got used to it being hot.
I want to go back to what you were saying about stock picking in this market versus buying indexes, those more passive vehicles, because you have a really unique view on the retail trader. We talk to a lot of people who manage a lot of money for more professional types. But when it comes to the self-directed trader, I mean, what is the rough breakdown, if you have a sense of how much stock picking they're doing versus we're going to go in the S&P 500, the Nasdaq 100?
I don't have specific percentages, but I can tell you that up until I'd say the pullback that we had at the end of July, early August, it was almost exclusively stock picking. And the things that we've been seeing all year, like in semiconductors, things like NVIDIA, but then also in various EV stocks in and out. And when Apple wasn't doing well, buying more of that. But in more recent times when we have had big dips, there has been more use of broad-based ETFs. And in fact, some inverse ETFs have been used. And actually, that I saw some unwinding more recently.
Fascinating. What about options market? We've been talking about how much options volume has really been driving a lot of the overall flow. And we've also been hearing from a lot of our interviewees lately that you see a lot of people running for protection. Are you seeing the retail trader do the same thing?
I think on the margin, but not any more than I think we've seen in the past. Like, I don't think there's been a huge increase in that. And I know there's been bouts of that. When you look at the put-call ratios and when vol spikes, you do tend to see a higher number. But I don't think that we've seen as much of an increase in it as other places.
How excited are you for Tuesday night? I feel like the debate could be more important than CPI. Is that possible?
I think so. I mean, at least it comes before, right? So you can watch the
inflation
debate
is done,
and move on.
right? It's not a concern anymore. It's
I think it's not. Like, you had Invitation Homes on Friday saying that like rental rates are going to come down. You've seen commodity prices drop quite a bit. So I don't know if it's done, but I think it's definitely trending in the direction, and we get to look at the labor market now way more than we did before.
Well, you also see that in trading. It feels like there's more trading around more of these jobs prints, not just NFP, but of course initial jobless claims, NFP, JOLTS, et cetera. That has really sort of replaced inflation as the focus of these markets, as the focus of the Fed. Do you think that's a bit premature? Should we be paying more attention to inflation?
I still think you have to think about it because there are aspects to inflation that I think could be treacherous. Like, if you look at shipping costs, like, they've gone up a lot. And so when that could actually end up impacting goods, but goods demand has been lower. So then it ends up being maybe a wash in that perspective. So I don't think you can ever not look at inflation. I just don't think it's as much of an issue as it used to be.
My question, too, I think we've been asking this a lot, is this a trader's market or an investor's market? Because when you listen to both presidential candidates, how much more does inflation become an issue going into 2025 when you take that little bit longer of a time horizon?
Yeah, well, to answer the first part of the question, I think it's both. Like, I think, you can always, it's always an investor's market because if you have a longer time horizon, you should just be investing. But for a trader's market, the fact that we've had vol spikes, that actually helps a trader quite a bit if you can play it and manage your risk properly. I think inflation from a kind of election perspective, that will continue to be there because it's affected all of us, to our everyday lives. So it's going to continue to be something that gets talked about. And it will take a little while to feel better, I think, for the average person.
A long while.
Yeah.
I mean, the fact is, unless we get into deflation, we're going to have prices at a level that make us feel uncomfortable until wages catch up.
And
right?
wages have actually started to catch up. If you look
were
at
listening to David Gurr's Janet Yellen interview, weren't you?
I mean, I don't think, I think it's natural for investors and traders to be nervous when things are going the way they should. I just think the market does better in extremes.
Okay, if it's a trader's market, I have to admit, we've been talking about how I'm going to try to gamble on football for the first time. Did it yesterday, $10 wager on a $400 outcome, didn't win any money, lost my $20, in fact. But what do you do with this market? Do you find people, frankly, gambling in this market as well? Do you find them, betting on outcomes through highly levered ETFs, as Katie has been pointing out throughout the show?
Following closely, you could say.
I think it's a mix. I think what we've seen actually is that people have core positions that they believe in for the long term, and then they trade around them. And I don't think there's anything wrong with that. You actually have a lot of professional portfolio managers that do the same thing, that trade on the volatility, and that's what we've seen in our.
I mean,
enticing.
with Bitcoin still at $55,000, I think a lot of those people are placing bets.
Well,
right?
actually, quick question on Bitcoin. I mean, are you still seeing that enthusiasm for Bitcoin? Because it's been trading around $60,000.
ETF outflows.
Yeah, outflows. But the actual price itself, it really hasn't budged that much since the end of February, if you take a wide generous band.
I mean, it's been more of a place to trade, I guess, and versus invest long term if you look at the near term price movement. But I just think that there's this dedicated faction of people, investors, that believe in Bitcoin, and every time there is, or any sort of coin, and there is a underlying belief that there is something wrong with the way fiat money works today, and it is built on debt. And as you have a deficit that grows, and neither party that seems to want to fix it.
Built on debt, but also on oil and tax revenue.
Yeah.
And other stuff on which Bitcoin is not built. It's a fascinating discussion, especially the interplay between the price level of Bitcoin, which is, you know, I've watched it from 600, so it's insane to me, and risk assets.
Yeah. Bloomberg Crypto tomorrow at 12 p.m.
I was just gonna tease your, you know, and we got an ETF into
That's
ETFs
true.
a little bit as well, so we hit both of your shows. Stephanie, thank you so much for joining us. Always a pleasure when you come on the program. Stephanie Guild there of Robinhood. Coming up, how Apple plans to integrate AI into its newest tech is the main question that we're going to look for the answer in Cupertino. Next, this is Bloomberg. Let's get now to high interest to look at what's making headlines around the world. Former ECB President Mario Draghi is calling on the EU to invest as much as 800 billion euros more a year and commit to the regular issuance of common bonds to compete with the U.S. and China. Draghi is also calling for the bloc to meet climate targets and boost the security of critical raw materials production, or else the EU risks failing to transform its economy during what he calls an existential challenge. Meanwhile, Trafigura and Gunvor are painting a bleak picture for the oil market. Two of the world's biggest commodities traders are echoing concerns over Chinese demand and plentiful supply. Speaking at Asia's biggest gathering of oil market participants, Trafigura's head of oil said he sees Brent sliding into the 60s relatively soon, sliding below this year's current low, that would be. And Apple's most important event of the year takes place today, the launch of its iPhone 16 lineup, as well as the new phone. The company is expected to set the stage for a new AI platform it calls Apple Intelligence, and provide major updates for the Apple Watch. Apparently there's going to be a change there, as well as to AirPods. Katie?
All right, let's stick with this event with Bloomberg Technology's Ed Ludlow, who joins us from Apple Park in Cupertino, California. And Ed, is what we're going to hear today when it comes to the iPhone 16 going to be enough to spark this massive upgrade cycle that Apple needs right now?
There are certainly sections of Wall Street that are bullish that it will be enough from the hardware side to prompt a cycle of some kind. Whether it's a super cycle or not, we'll find out. 4 variants of the iPhone 16 generation with kind of the more substantive changes in the Pro and Pro Max. We're expecting kind of a different screen size, improved processing power. And those latter points are important because the emphasis from Apple earlier in the summer at its developers conference was it is the hardware that enables the AI functionality. But as we've reported, this new generation handset will ship later in the month. Apple Intelligence rolls out to both this new generation and prior iPhone 15 generation handsets in October, and there's been some delay in that sense. And I think you guys have talked a bit about the wearables. Don't forget about wearables. You know, in combination with iPhone, that's 60% of revenue. There's been some time since we've had a refresh there. You know, entry point, mid-level AirPods. Interesting to see what they do on pricing and what they do on technology to bring in consumers that haven't yet gone to that part of the Apple ecosystem.
But in terms of making major changes, Ed, it seems like they're falling short on iPhone in terms of artificial intelligence capability. In terms of the watch, I guess the holy grail there would be blood sugar monitoring, which I don't think they're going to be announcing today. I don't know what you could do to change AirPods other than like the shape and the color. So are we really expecting major changes, or is this like a decal package?
Well, major changes in the context of wearables because there hasn't really been a substantive refresh since 2022. On the iPhone side, honestly, no. I mean, they are modest hardware upgrades. But that said, you know, there's something common to the 16, 16 Plus and the Pro variants, which is a button, a shutter button that sort of emulates the button on a DSLR camera with touch sensitivity. You know, when Bloomberg first reported that, there was some skepticism that that's enough. But that said, you know, there's also evidence in key markets that consumers have been sitting on the sideline. You know, if you look at the full year forecast for iPhone shipments, it's flat to a gain of 1%. And there are evidence, for example, in China, where Apple Intelligence won't even roll out, that the consumer's been waiting or holding off. And so whether it's enough, we'll have to wait and see. But they are limited in sense of what the difference is to the 16 generation and what it was when we got the iPhone 15 last year.
It'll be interesting to see if that consumer story topples that AI story, at least for today. Ed, thank you so much. That is Ed Ludlow in Cupertino. We're looking forward to your coverage today. We're going to get more insight now on Apple. We are joined by Will Power. He is a senior research analyst at Baird. He has an outperform rating on the stock with a price target of $240. That's about the middle of where Bloomberg sees all analysts seeing the price of Apple going. And Will, the major question here is the belief in this iPhone super cycle. There is a lot of hope on that super cycle, but a lot of uncertainty on how quickly that could materialize. What is your view?
Well, good morning, and thanks for having me. Look, we've been long-term, bulls on Apple, and we do think Apple Intelligence in particular has the opportunity to accelerate iPhone sales. And I think it's important to, set the proper context here. If you look at the broader iPhone environment, as you all know, iPhone's been in modest decline the last couple of years, and we think that's kind of set up for the perfect storm opportunity for Apple here, in so much as upgrade rates are at historical lows. If you look at AT&T as a proxy, still one of Apple's larger customers, the upgrade rate was 2.9% in Q2. We believe that's its historical low. Basically, what that means is consumers are holding on to their devices longer than ever. And with what we think is close to a billion iPhones globally, that's a massive opportunity to upgrade, and the biggest opportunity they've had in some time. And so our view is that Apple Intelligence can provide that catalyst to provide a surge in iPhone sales as we move through this next fiscal year and into the fiscal year, following that.
Well, in addition to the AI enthusiasm maybe going to prompt that upgrade cycle remains to be seen, I want to talk to you about the camera upgrades, because I know people in my personal life who actually have switched over to iPhones, to Apples for that camera. And I thought, they were already at their total addressable market. When it comes to the camera, how significant do you expect to be that sort of shutter button that they're introducing?
That's a good question. I think it helps. I think most of us already view the iPhone as our principal camera, right? And so I'm not sure it changes, the paradigm that dramatically on that front. But anything you do to make it, easier, for, consumers and, front of mind, is probably a positive opportunity. And so I think, a lot of what they're going to roll out from a hardware perspective is more iterative, in fairness. But I think that camera button, adds something different than what, they've had in the past. And there'll be some changes in screen sizes, et cetera. And then we'll see what else they roll out on the software and services side, because that's really the secret sauce for Apple.
I just don't understand how much better can it get? I mean, it's already better than the digital cameras, the expensive digital cameras I was buying in the early 2000s. I already used the volume up button to take pictures. And in terms of AI, until Siri can actually answer some of my questions beyond unit conversion, I don't see it as a reason to upgrade from, a 12 or a 14, or certainly not a 15, right, Will?
Hey, look, no, it's a great question, and the proof's going to be in the pudding on that, right? I mean, Apple's going to prove that Apple Intelligence, is Siri on steroids and more, right? As you look at universal search, you're using natural language to, put together photo albums. Some of the examples they've laid out on the messaging front and what you'll be able to do there, and add moods and make changes, to moods on the fly. And, that'll probably be an iterative process as well. But I think just the buzz alone, coupled with the fact that consumers have held onto their phones forever, and we all know that just anecdotally, from ourselves and our friends, creates a moment where it doesn't take much. And we think Apple Intelligence can be enough to accelerate iPhone sales. And that's really the bet, that we see an upward inflection in estimates, and that's what continues to support the stock.
Dare I say it, is some of today's launch really about the products that they're offering that are improved at lower price points? Because if the problem is partially the consumer here, then don't they have to bring a wider array of consumers in? We all like to talk about AI. We like to talk about the hot stuff. But it is every person who just needs a phone and AirPods and maybe watches that maybe we should worry more about.
That's a good question. I think historically, Apple's been pretty resilient in different economic, cycles. And the reality is consumers have proved a willingness to spend even on higher priced Apple devices. I mean, in fact, if you look at, the SKUs, for Apple, it's been shifting more and more to the Pro and the Pro Max, which are obviously the more expensive devices. And so, I think, over a period of time, they've certainly tried to make the price points more available to a wider range of consumers, not only here, but abroad. But I think, honestly, there's still a focus on the higher end devices. I mean, because again, that's where you're seeing the highest interest. And I think even in a tougher economic environment, my suspicion is the higher end devices sales will remain resilient.
All right. Well, great to preview the big day for Apple with you. That, of course, is Will Power at Baird. And of course, Apple shares down a little bit right now, 0.8% or so, but up 14% year to date. Now, still ahead, Warner Brothers scaring up a big box office weekend for Beetlejuice, the sequel. Details in our today's Social Climbers next. This is Bloomberg. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, executives at Intel, AMD, and Texas Instruments, as well as Analog Devices, are set to testify tomorrow at a Senate hearing on how the chip companies are complying with export controls aimed at blocking Russia's access to U.S. technology. Next up, some good news for Boeing. Finally, Boeing and its largest labor union have reached a tentative deal that could avoid a potentially crippling strike at its Seattle area factories. The landmark offer includes a 25% wage increase over 4 years and a commitment to build Boeing's next plane in the Seattle area. And finally, there's a lot of box office juju in the afterlife. The movie Beetlejuice, burying expectations and bringing $110 million in its opening weekend. The strong debut of the 1998 comedy sequel is good news for cinemas still struggling to recover from the pandemic, as well as strikes by actors and writers last year that limited film production. And you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, let's get a check on these markets. Of course, the S&P 500 currently up about 0.9%. The Nasdaq 100 up 0.9%, had been 1.2%, but coming in a little bit here. And the 10-year yield currently flat as a pancake, Sonali, right at 3.71%.
Nice to see a little bit of a lift after a 4-day losing streak, and a pretty broad-based one at that. Now, coming up, we're going to dive deeper into the cybersecurity sector with Okta CEO Todd McKinnon. That conversation next. This is Bloomberg.
Russian-backed entities pursued a sprawling, years-long operation to meddle in the 2024 U.S. presidential election and boost the Kremlin's interests. The Biden administration announced steps to disrupt the alleged scheme. Joining us now to assess the election security risk is Todd McKinnon, CEO of cybersecurity firm Okta. Todd, great to have you on. We're going to see the first debate tomorrow. Obviously, Russian interference and the interference of other countries in the U.S. election has been a big topic since 2016. How do we look this year?
Well, I think everyone's concerned about not just election security, but security overall. The fact of the matter is that as digital technology provides so much value and benefit to companies and individuals, and it's how we get our media and on and on and on, the risk is high, and particularly in election season where everyone's trying to convince everyone to think a certain way and to take a certain position, the risk is high.
And let's fold AI into this conversation. When you think about the developments that we've seen in generative AI, will that make potential cyber attacks worse in this environment, or potentially help companies in preventing those attacks?
Well, I think it's smart to be wary and vigilant, but the reality is that the AI technology helps the defenders of risk as well. So it can potentially help the attackers as technology evolves, but people building the defenses, Okta included, are using AI to build better defenses. So we have to stay vigilant and keep building tools for customers to be as secure as possible and stay responsive as the attackers adapt.
You know, Todd, I'm really curious to see what form you're seeing election interference really start to happen as it regards to cybersecurity. According to the FBI, the Russian entities that they had targeted here sought to drive traffic to fake domains using influencers, social media ads, social media profiles, pretending to be both media organizations as well as elected officials here in the United States. What are you seeing?
Yeah, well, we're an identity company. And so at the heart of what we do is make sure people online and at work and the customers logging into websites are who they say they are. And that is one of the risks, is that people take fake identities and they coordinate bot attacks and upvote certain opinions online. It's all about making sure that the people are the real people and that people can trust the identities that they're interacting with and trusting online.
If I look at your revenue chart on the Bloomberg, it just goes up and to the right. What kind of growth can we expect going forward? Is it going to continue to be, doubling of revenue, tripling of revenue every year?
Well, I think we're doing two things. One is that in the last couple of years, the macroeconomy was different than it was in the years ahead. So as growth moderated through that time period, we're very focused on, as you mentioned, over the long term, capturing this big market opportunity. We think in the long term, the identity market opportunity is an $80 billion market opportunity. And our revenue last quarter was about $650 million. So obviously we have a lot of potential growth ahead. So it's about reigniting that growth. And secondly, it's about doing it in a profitable way. We're super excited about the record profitability we delivered last quarter, strong cash flow. And that's all on the back of great customer success. You look at customers like FedEx, which has 350,000 team members trusting Okta to connect them to their apps and services at work, or it's Wyndham Hotels, which has 100,000 franchisees connected to their applications through Okta, or 100 million loyalty members. So these people are all making sure that the people online who they think they're interacting with are the right people. And that's what we do. And we help them use technology and empower their businesses forward as a result.
And Todd, I know you're probably not mono-focused on the day-to-day of the share price movement, but you take a look at your year-to-date chart, which we just flashed, shares down nearly 20% year-to-date. What do you think that the market is missing about your message here?
We keep oriented on the long term. And if you just look at the arc of history, it's more cloud technology, it's more mobile technology, it's more people working from different locations, it's more risk for security, it's more prevalence of validating who the people are, who they say they are online. And identity is at the heart of that, whether it's keeping customers more secure, keeping companies' customers more secure, keeping employees more secure. We're driving all of that, and that's just a long-term trend for the future that's going to benefit us. And so we're working hard to build the right products and the right company and the right culture to take advantage of that.
And it's really interesting. It feels like there's sort of this mismatch where it feels like normal people, and really everyone on Wall Street too, would agree that cybersecurity is very, very important right now. And then you take a look at some of the share prices, yours included, and this tapering of top-line growth expectations for companies such as CrowdStrike, et cetera, Zscaler. And it feels like, again, there's sort of this disconnect between how markets and investors are valuing companies such as yours and looking to future forecasts and the need that you and your peers provide.
I think that's the reality we live in. There can be short-term ebbs and flows in the way that the market perceives you. But in the long term, you have to focus on a business and an opportunity that's going to be valuable to customers, and you got to invest to capture that opportunity, and that's what we're trying to do.
You spoke a little earlier to this idea of returning to larger growth rates here, and the growth rate that Wall Street expects from you is pretty significant here. You have Citigroup's analyst recently asking your executives on whether you can really start to return to that 35 to 40% growth level for your workplace business. What would it take? How long would it take for you to get back there?
Well, it's going to be built on the foundation of great product innovation. And just in this past quarter, we've introduced 3 important new innovations. One is a capability called Identity Threat Protection, which enhances the way we're using AI to further protect identities for workforce customers. The second is Identity Security Posture Management, which is a product that actually assesses a broad range of systems in a company's environment for any kind of identity threats or risks. And the third is Highly Regulated Identity, which helps customer identity work in these regulated industries that have certain regulatory requirements on how they handle secure data. So if you look at growth rates reaccelerating, it's going to be, we're a company that was built on innovation and product, delivering new products, and we're really excited about the pipeline we have, and it's about delivering those products, getting them out to customers, having customer success, and that's going to drive the growth.
How fragmented, though, is this market, Todd? I mean, you do $650 million in revenue. That seems like a small slice of the global IT spend, or certainly cybersecurity spend overall. Do you need to be consolidated? Does this industry need to be consolidated?
It's something that is really, really important to us and our customers. The security market and the identity market in the past has been too complicated. It hasn't been, we haven't done a good enough job as an industry making it more standardized and plug and play to have all these technologies fit together. So one of the things we're really working on is making that better. So every security technology fits together more easily. Every piece of application or infrastructure technology plugs in seamlessly to your security tools and your identity tools. And what that'll do is it'll make it easier for customers to adopt more technology and a choice in technology and make it all work better together and more effectively, and let the customers get back to what they really want to do, is focus on their business, driving revenue, reducing costs. And the security and the infrastructure concerns will just be taken care of by vendors in a very seamless way.
All right, that's a good place to leave it. Todd, really appreciate your time on this Monday morning. That is Okta CEO Todd McKinnon. Meanwhile, you take a look at these markets right now, a little over an hour into the U.S. trading day. Again, a rally. We're off the session highs. You can see the S&P 500 up 0.8%. The NASDAQ 100, keep an eye on big tech, because the NASDAQ 100 up about 0.6%, having its gain that we saw earlier in the day. We'll keep an eye on that one. And then you take a look at the bond market there. Absolute crickets right now on the 10-year Treasury yield. But let's take a check on what's moving underneath the surface. We're going to do that with Bloomberg's Emily Greifeld. Emily, what do we have?
There's a lot of moves underneath the surface. I'm watching Palantir, that stock up something like 12%, and this, of course, on news that it's going to be added to the S&P 500 in about 2 weeks from now. Now, we know that companies need to be about over $18 billion in market cap and meet certain profitability requirements. Dell is another name that's going to be added as well. Both of those companies well above the $18 billion market cap, and kind of playing on that AI theme that has really dominated the stock market this year. I'm also looking at Summit Therapeutics, because this stock is hitting a record intraday high, up something over 70%. And this is coming after the biopharma firm presented data showing improvement in its lung cancer drug compared to a drug from its competitor, Merck. And we're looking at analysts saying that this drug is clearly better. That's at least according to H.C. Wainwright analyst Mitchell Kapoor. And then finally, I'm looking at Squarespace, because volume in this website publishing stock is up 90 times the 20-day average, only up about 2% in the green, but still positive territory here. And this is coming after private equity firm Permira raised its buyout bid for the company. Shareholders will now get $46.50 in cash versus that's about $2.50 higher than the previous offer price. Total transaction value now coming to $7.2 billion, and that stock higher on that news.
Stock higher, close to that offer price. Merger arbs pouring it out today.
Yeah,
exactly. Emily, we thank you so very much. Now, coming up, Treasury Secretary Janet Yellen brushes off concerns over an economic hard landing. We're going to have more on that interview next. This is Bloomberg. The latest jobs data coming in cooler than expected, but Treasury Secretary Janet Yellen isn't too concerned. Take a listen to what she had to say in conversation with Bloomberg's David Gura over the weekend.
What I see when I look at it, the economy, broadly speaking, is very strong growth, deep into a recovery with the economy operating at basically at full employment. We're still seeing 3% growth. Roughly over the last year, and it continues. Consumer spending, investment spending, solid. Inflation coming down substantially, and I believe headed back to the Fed's 2% goal and what I describe as a strong, solid labor market. Clearly, the pace of job creation has gone down, and that's something we should expect. The unemployment rate has moved up somewhat off its very low level of, I think it got down to 3.4%. But it's not common in the United States to have unemployment rates in the 4s. And it's what I think of as a full employment economy.
You say many people would call that a soft landing. So that is the Fed being able to get high inflation under control without triggering a deep downturn or a recession.
That's right.
Many people would say that. Do you say that as well? Do you think that are you fairly confident that we're going to get that?
I think what we're seeing now is consistent with that. And, while there are risks, it really has been amazing to be able to get inflation down as meaningfully as we have. And I'd say also wages are going up at a decent clip, and real wages adjusted for inflation are rising, and a lot of especially low-income households are under stress. Aspects of the cost of living for them are genuinely challenging, and it's our administration's top priority to try to address that. It's still true that wages have gone up since before the pandemic in real or inflation-adjusted terms, and continuing to rise at a decent pace.
There was this other thread that came out, and that is you are able to carry a tough message to your counterparts, and they seem to, if not like you, hear you out, spend time with you. These meetings, as they often do when you meet with counterparts in China, last almost days, they last hours. And I was thinking of something that I saw Alan Blinder, your former colleague at the Fed, say about you, and that is Janet Yellen makes an argument on the merits and she sticks with it. And she's good at articulating an argument in a way that doesn't leave people on the other side hopping mad at her. What is your secret? As you think of embracing this role as a diplomat, what has made you particularly, I'll say particularly good or have the facility for it?
Well, thank you for the compliment. I have seen this sort of diplomatic initiative, both with China and with other countries, as really critical, because we need to work together collaboratively to solve every global problem that we face, from climate change to Russia's aggression to issues that we have with China. And during the previous administration, I'm sorry to say, our alliances frayed, and it was America first, and that should really never be America alone. And it was necessary to rebuild alliances to work with allies around the world.
And that was Treasury Secretary Janet Yellen, of course, speaking to Bloomberg's David Gura at the Texas Tribune Festival. I'm pleased to say David joins us now for more. So, David Gura, in hour with the Treasury Secretary. I mean, do you even have headlines there? What was the one big takeaway? There were headlines.
There were. I mean, the stuff that she said about China was interesting. She talked about maybe wanting to go back for another visit or have her counterpart come here. And I think what's fascinating about that is that she's established this very robust channel with them that I would say arguably is stronger than what the State Department has or the Commerce Department. And what I was kind of getting at in that last question to her is, when she went to Beijing, she met with everyone for hours and hours and hours, and she wasn't delivering a lot of good news to them.
Right.
But they heard her out, and she delivered that tough talk in a way that they were at least seemingly content to listen to. So that was some big news. I asked her if she has any thoughts about sticking around if Kamala Harris were to win. She didn't rule that out completely. But we talked a lot about just her life in public service. I mean, this is many decades now. She's had all of the major jobs, from advising President Clinton, his chief economic advisor, Fed vice chair, and now this one. She is, by the way, the only woman to have had that job, both of those jobs, and that's something she doesn't talk a whole lot about, but it's significant as well. What's left? Maybe retirement. I would hope that there is some of that for her when this is all over with. But as I say, she's done all of the big jobs.
Hey, Gura, I'm really curious about this idea of sticking around, because I'm knee deep in that.
She's not sticking around.
Right,
Did you listen
the parlor
to
game. I did, but
the door was only left open the slightest
the
amount.
parlor game of who would be a Treasury Secretary in a Harris administration is a very active parlor game right now. Let's call it that. Is there anything to be learned from the Yellen administration in the Treasury to take over? Because it's been controversial, to say the least, from the Treasury issuance, maybe more successful with China, but it's been a mixed
Are you asking on behalf
reaction.
of Jamie Dimon?
I'm asking on behalf, perhaps, of Blair Efron and Ray McGuire.
Fair enough,
right?
or Lael
Gina
Brainerd as
Raimondo,
well. Yeah,
right.
I mean, I think that you look at the way that she's reshaped this job, and there was a line of questions I had for her just about how she's set out her priorities. And I said, you're Secretary of the Treasury, but acting like a diplomat. And so much of what she's done has been on the international stage. So from the get-go, it was corporate taxation, really marshalling a lot of countries, including Ireland, to make progress on that, which is extraordinary. Did the same thing with the war in Ukraine, almost overnight, marshalling allies from around the world to impose these sanctions. And I think if there's a lesson to be taken away, it's how do you continue to use the musculature that she's built, the might that the Treasury Department's built, particularly when it comes to taxes and sanctions. And there was something I asked her about. She spoke at a hearing on Capitol Hill this summer, and a congressman said, "What are you most worried about?" And she said, "Look, we have these incredibly strong sanctions powers, but there is a potential casualty to that, which is countries can look elsewhere to other currencies, and that could weaken the dollar." So we talked a little bit about that in our conversation, which you can hear in its entirety on Bloomberg.com and on the terminal. But that is something that worries her, and it's certainly something that worries folks on the other side as well. Donald Trump over the course of the weekend.
I mean, maybe the next Treasury Secretary will focus on America, right? I mean, I always find it interesting because even I was young during the Clinton administration, too young to pay attention to Janet Yellen.
Yes, still
but
young.
I grew up with her as a nonpartisan person in the Fed. And so ever since she's come into Treasury, she's so political. I mean, she's towing the line. You say that she's calm and talks in a manner to not disrupt markets, but she definitely throws shade at the Trump administration.
She is very careful, and I will say, the beauty of having this amount of time with her is that we can kind of go beyond, I won't say talking points, but she could think through in real time a lot of these issues. And I think she's studious not to violate the Hatch Act. I tried to introduce some things that maybe would get her to talk about Vice President Harris. She didn't really go there, but she does talk her book, which is what the Biden administration has proposed. You talk about domestic issues. It's the Inflation Reduction Act. The day before, I tagged along with her. We went to the IRS processing facility in Austin and saw firsthand all of the improvements that they've made in the last year. New processing machines to develop efficiency, modernize that whole thing. These are things that she cares a lot about. They were very nice. There were no jackbooted thugs that I could find anywhere in the mix. So
we have less than a minute left with you, but you're going back on the road, David Gura, going to cover the debate for us. What's the expectation there? This is high stakes.
It's high stakes, and you look at the most recent polling, this New York Times Siena College poll, and the big takeaway for me, aside from it being incredibly close, which we know that it is that there are people who don't really know who Kamala Harris is or what she stands for. And this is, right now, when you look at the calendar, the only moment when these two candidates are going to face off on stage. And I think there will be a lot of people who are watching this just to see how the two of them comport themselves and how she hopefully fills in for a lot of folks who don't know much about her and what she's interested in, animates her, who she is as a politician and a candidate.
It'll be fascinating for sure.
Yeah.
And
they've never met. I mean, they've never been in the same room as one another.
Wow,
so just
incredible.
That drama.
I heard you describe that this morning as delicious.
I think it is
and
delicious.
I totally agree.
Yeah.
Tasty.
David Gura, thank you very much for the appetizer. Looking forward to the entree. Bloomberg Television and radio will have special coverage of ABC's presidential debate between Vice President Harris and former President Trump from 8 p.m. to 11 p.m. tomorrow. And we will be simulcasting that debate as well, so you can watch it right here. This is Bloomberg. Let's get to the trading diary, what you need to be watching this week. In the next hour, Apple holds its product launch event. We're expecting details on the iPhone 16 as well as other new devices. Then, Kamala Harris and Donald Trump had their first and maybe only television debate, this one out of Philly on Tuesday night. We're all going to be watching that starting at 9 p.m. You can see it on Bloomberg Television as well as ABC. Wednesday brings the final inflation report before the Fed's next meeting on September 18th. And Friday, we get the latest from the University of Michigan in terms of their consumer sentiment survey. We're looking forward to that as well.
Yes, we are. Let's take a look at markets right now, though, because it's interesting. You take a look at the NASDAQ 100, had been leading gains, no longer having its gain from earlier in the day. The NASDAQ 100 up about halving. halving. I'm going to work on that one. Anyway, the Nasdaq 100 is up about 0.6%. The S&P 500 up 0.8%. There's still jitters out there. You don't see it in the bond market, though. Coming up tomorrow on Open Interest, Bill Smead, Katrina Dudley, and then politics and theory, or policy rather, with Tobin Marcus. This is Bloomberg.